Today, we're going to be discussing the 10 different types of stock trading signals that you can use to make informed decisions in the stock market. These signals are important indicators that can help you make money. Before we dive into the different types of signals, let's first talk about the best indicators to use. The first indicator we recommend using is moving average. Moving average helps you see the trend in a stock's price. If a stock is trending upwards, you'll want to buy it. If it's trending downwards, you'll want to sell it. The second indicator we recommend using is Relative Strength Index (RSI). RSI measures the strength of a stock's price. If the RSI is high, it means the stock is overbought and you should sell it. If the RSI is low, it means the stock is oversold and you should buy it. Now that we have covered the best indicators, let's move on to the different types of stock trading signals. Number 1. Trend line breakouts. This signal occurs when a stock's price breaks through a trend line, indicating a change in direction. Number 2. Moving average crossovers. This signal occurs when a short-term moving average crosses over a long-term moving average, indicating a change in trend. Number 3. Bollinger Bands. This signal occurs when a stock's price touches or breaks through the upper or lower Bollinger Band, indicating a possible trend reversal. Number 4. MACD crossovers. This signal occurs when the MACD line crosses the signal line, indicating a change in momentum. Number 5. Candlestick Patterns. This signal uses patterns in candlestick charts to indicate a change in trend. Number 6. Volume spike. This signal occurs when there is a sudden increase in the volume of a stock, indicating a possible trend change. Number 7. Gap up or gap down. This signal occurs when a stock's price opens higher or lower than the previous day's close, indicating a trend change. Number 8. Fibonacci Retracements. This signal uses Fibonacci levels to indicate potential levels of support and resistance in a stock's price. Number 9. Head and shoulders pattern. This signal occurs when a stock's price forms a pattern that looks like a head and shoulders, indicating a potential trend reversal. Number 10. Stochastic Oscillator. This signal uses a formula to indicate if a stock is overbought or oversold, helping to indicate a potential trend change. That's it for today's video on 10 types of stock trading signals. We hope this information helps you make informed decisions in the stock market. Thank you for watching. Please like and subscribe for more content and comment what you would like to see.